Joining me now to discuss the latest on the European debt crisis is senior economist from ING in Brussels, Carsten Brzeski. Carsten, thank you very much for joining me. Now, today we saw the release of the Eurozone and German ZEW surveys looking at the current situation and economic sentiment. What do the results tell us about the strength of the German economy at the moment and economic sentiment in the Eurozone as a whole right now?
We've seen that all economic sentiment indicators actually have been dropping for a couple of months now in the Eurozone and also in Germany. Today, the ZEW actually showed some stabilization, but I think we need to be cautious because normally the ZEW indicator is not a good predicting or leading indicator for the real economy. Nevertheless, I think it shows that there is a certain calm in financial markets. This fear of Eurozone breakup has somehow been kicked away by ECB action, by the German court. So there is now a chance that actually first we see a further contraction of the economies, including the German economy, and then towards the end of the year we see a further stabilization and hopefully some growth again.
Well, the market has seen a decent run since the ECB attempted to alleviate some of the concerns regarding the Eurozone. And of course, the market rally continued when the Federal Reserve announced unlimited QE. But how much longer do you think the risk rally will continue? With Spanish 10-year yields having climbed back near the 6% mark, is the risk rally over, or does it still have some time to run?
It is a tricky question because here we have two opposing trends actually. So one which would argue in favor of a continuation of the rally is obviously the liquidity being pumped in by the Fed, but also by the ECB. On the other side, or on the other hand, we do see that actually the fundamentals have not changed. We still see that the U.S. economy is rather weak and that all the fundamental problems of the Eurozone have not changed, which means we're still in recessionary territory. We still need to see governments implementing the austerity measures, the reforms, so that there is still a lot of work to do, and this clearly has the potential for negative surprises and for disappointment on markets. I'm just thinking of, for example, Greece, where we get the Troika report by mid-October. Also Spain, whether or not they will ask the EFSF or later the ESM for some European bailout money. So that there are many pending issues which still have to be solved. So I think the potential for disappointment is higher than a continuation of the rally.
Obviously, discussing whether we are actually on a more stable footing or not and Spain's determination to resist a bailout. Carsten, do you think Spain will actually request a precautionary support programme soon? Or is it in some respect the markets who will decide when Spain will ask for aid?
Of course, now in the short run, actually, just the pure announcement by the ECB has helped the Spanish government because we saw that Spanish yields came really down significantly. But I think eventually, and if you read between the lines, of politicians' statements over the last days and weeks, it is obvious that it is just a matter of time before Spain will ask for rescue money. It doesn't have to be a fully fledged bailout as in the case of Greece or Ireland or Portugal. It could also be just a bailout light, which could be a precautionary program, an emergency lending. But I think that really once the ESM is up and running, once we've seen also actually the regional elections in Spain, so then we are by the end of October, I think this could very well be the point in time when Spain asks for some European support.
Okay, you also mentioned Greece earlier and the Troika, which is expected to deliver its report on Greece in the next month or so. Of course, this no doubt has the potential to cause a lot more volatility in the markets, no? The
closer we get to the release of the report, I think the more rumors, the more guesstimates we will see. The big question is here: will the other Eurozone countries give Greece more time? Will they show a bit more flexibility without giving the impression that they are also willing to pay more money? And will Greece really accept it? I think that in the end we will see a continuation of the muddle through, so that a solution will be found, that the Troika report will be positive, that Greece will receive a bit more time, and that actually the other Eurozone countries will simply kick the can further down the road.
What about growing social unrest throughout Europe against these harsh and unpopular austerity measures, in particular Spain, Portugal and Greece? The protests we're seeing. Surely heightened tensions will continue, if not worsen, particularly, for example, if Spain do agree to the potential conditions attached to the aid.
It's true, but I think conditions or not, the economic prospects, of course, are already so dire that the social tensions will probably increase. Because if you have an unemployment rate of 25%, it's obvious that there are social tensions. Here, I think it will be important that at some point in time, in the next 6 to 12 months, we finally do see some positive impact from the reforms. Let's not forget, Spain has already started with the austerity measures, I think, two years ago. So we should at least see some stabilization of the economy in a year from now. Doesn't take away that, yes, there's a high risk of further social tension, which then again could really put pressure on the entire project of further Eurozone integration.
Where do you stand on the single European banking supervisor debate in regards to the timescale and whether all the 6,000 or so banks in the Eurozone should be monitored by the new supervisor, or whether to begin with only the largest banks that pose the greatest risk?
The bigger picture of a banking union is indeed very important and will be crucial for reshaping the monetary union. But I think that really it also has to be pragmatic, which means that we will see that by the start of next year, probably the ECB will be responsible, but they will not be able to really already survey or monitor 6,000 banks. This is simply too much. You cannot implement such a role within slightly more than 3 months. So what we will see is that the ECB will probably start off working together with the national supervisors, and then gradually on will continue monitoring more banks. Actually, I think really all Eurozone banks. And then the big question further down the road is actually which responsibilities and which powers this new supervisory authority will really get.
Carsten, thank you very much. Some great comments there. Now, I'm afraid that's all we have time for, but do stay tuned to Dukascopy TV for the latest financial news and updates. But for now, goodbye.